Good evening. Thanks for joining us. This is NTD Business, and I'm Paul Graney. Big market sell-off today, just as the Federal Reserve Chairman was speaking. We have analysis. Do you think online hype around stocks drives their prices higher? Well, now you can invest in a fund that tracks social media posts. And coming up, New York launches a new COVID passport. We asked New Yorkers what they think. Pretty big sell-off in the stock market today, just after the Federal Reserve Chairman spoke. The Dow fell 346 points, or 1.11%. SP 500 dropped 51 points, or 1.34%. The Nasdaq pulled back 274 points, or 2.11%. It wasn't just stocks. Bonds sold off, precious metals all sold off. Oil, just about the only thing that worked. OPEC agreed not to increase production today, helping prices. A knock-on effect of lower bond prices is higher yields, and that could be pushing up mortgage rates. You'll now pay 3% on a new mortgage or refinance. It's the first time it's broken that level since last July, so we'll see if that dampens the housing boom. So what exactly did the Fed Chair Jerome Powell do to curse the markets today? He spoke at a Wall Street Journal jobs conference, and as he spoke, everything just tanked. Asked Real Investment Advice's Lance Roberts why.
First of all, interest rates have been rising here over the course of the last month or so. Really not a surprise here. Again, lots of expectations about this reopening of the economy. We're going to have more stimulus. And of course, whenever you have more economic growth, you have higher inflation, higher prices. That leads to higher interest rates. So interest rates pushing up here. What the markets were really kind of hoping for today from Jerome Powell was at least a little bit of conversation about, hey, we're aware that rates are coming up. What we can work on is doing what we call Operation Twist, which is where we start, kind of flattening out the yield curve a bit, so to speak, by buying longer end treasuries and selling our shorter end book. And that would have given the market some confidence that rates aren't going to get out of hand. But he made really no mention of that at all. He simply said, hey, we're watching a lot of financial conditions. It all seems fine to us. But the market doesn't really agree. Higher interest rates are not good economically. We're an $85 trillion indebted economy and $20 trillion in GDP growth. So higher interest rates impacts everything from mortgages to autos to credit cards to payments. That's going to potentially impact consumers and their ability to cope with higher living costs.
So it's really what Chairman Powell didn't say rather than what he did say. And you mentioned offline that really we've seen a sell-off in everything, the precious metals,
right.
Stocks. You said there's nowhere to hide. Is this an unusual situation?
No, not so much. Look, we've had a huge run in the markets from the March lows of last year, and we're well within the context of just a normal correction. As you know, we've been talking about this now for about the last 3-4 weeks. Our money flow indicators have been talking about weakness in the markets. We've had a lot of really selling underneath the rally, so to speak. And so this is just really that kind of that finalization of this correctional process. So far, it hasn't gotten out of hand. Yes, today's pretty deep, no doubt about it. And we were kind of hoping for a little bit of a reflexive rally here, but looks like the markets are going to try to test some of their support levels going back to earlier this year. So it's important the markets do hold up here. There is a risk that things could get out of hand. So it's important to pay attention to your portfolio right now for sure.
Is it important for yields to come back down for the market to rally again, you think, or we're getting ahead of ourselves? It's just one day of trading.
Well, today's just one day, but look, the reality is, as I was saying earlier, higher interest rates are not good economically because everything that you do is connected in some form of debt. And again, most consumers, 80% of Americans live paycheck to paycheck. So higher interest rates immediately change spending habits. I was going to go buy, a new piece of clothing or whatever it is, but, I've got to make a higher credit card payment this month. So it has immediate impacts on consumption. And of course, don't forget that the economy is not the stock market. That is true, but the stock market is where, the economy is where all of the stock market's earnings come from, and that requires consumption to be strong, and higher interest rates are going to impede that process.
Do you think Chairman Powell's focus at the moment is on the economy, rather than on the markets, as he talks about?
Well, I think Jerome Powell's trapped, and we've talked about this before numerous times and written about it as well. The problem for Jerome Powell at this point is that if interest rates go up, technically he should be raising the Fed funds rate to potentially quell inflationary pressures. But again, by doing that, he slows the economy. So if he does nothing at this point, the economy potentially gets out of hand. Interest rates are tightening monetary policy for him. And he really can't do anything about it. He can't do more QE. He can't lower interest rates below zero. So pretty much all he can do is sit back at the moment and just kind of hope things don't get out of control. This has been a problem we've talked about for a while, is that the Fed has now gotten themselves into a trap of where they can't really do much with monetary policy because everything you do has a negative consequence.
He seemed pretty anxious today. From looking at him, he was a little bit stressed, poor Jerome Powell. Yeah, Lance, really appreciate it. Thank you so much.
My pleasure as always. Thank you.
Jerome Powell says the Fed is focused on getting the country back to full employment. But he does admit we're a long way away from that. And looking at last week's job numbers, he's right. The number of Americans filing for unemployment benefits last week actually rose. Another 745,000 Americans filed jobless claims. That's 9,000 more than the week before. Under normal conditions, maybe 250,000 Americans file for unemployment in a given week. But other economic data hints at a smoother sailing ahead. A manufacturing employment indicator rose to a 2-year high in February. Also, a Federal Reserve report noted that many businesses are actually having a hard time attracting and retaining qualified workers. Maybe unemployment benefits are too good. The labor shortage problem is most acute among low-skilled occupations and skilled trade professions. They've just released their version of the relief bill, and it's over 600 pages long. Here's Senate Majority Leader Chuck Schumer introducing the bill.
It's time to move forward with this legislation, which will be one of the largest single anti-poverty bills in recent history. It is a time to lift this country out of crisis and set it on a path to a strong and swift recovery. It is time to tell the American people that help is on the way.
Not sure free money really solves the poverty problem, but anyway. The Senate bill is similar to the House version, but there are two major differences. It doesn't include the $15 minimum wage hike, and it has a lower income threshold for stimulus checks, $80,000. That means fewer people will be eligible to receive the check. The bill still includes the $400 weekly unemployment benefit, though, but that could come down to $300 during the debate. It's going to be a long process before we know. Senator Ron Johnson wants the entire bill to be read before the vote, understandably. He says it's to highlight the waste and abuses in the bill. But reading it will apparently take 10 hours. Scores of amendments could also be brought up during the vote-orama before senators could finally vote on the relief bill itself. And New York is experimenting with a new COVID passport app. It's meant to make reopening venues and businesses a little bit easier, but some say it's unfair on people who aren't vaccinated. NTD's Phil Zoe has the details.
New York is testing out a CCP virus passport. You can download it on your smartphone, and just by scanning a QR code, you can show your COVID test results and if you've been vaccinated or not. So far, it's been used at a New York Rangers and Brooklyn Nets game.
It's called the Excelsior Pass, launched by New York's governor. The new technology is meant to fast-track reopenings for large venues like stadiums and theaters. But it could also be used for smaller businesses.
A bit intrusive, but I think you get over that and accept the fact that that's for a good cause.
Anything that's going to get this thing over with, finished, so that we can open up the economy, get everything stabilized.
One business remains neutral.
I respect everybody, If you want to use it or not use it, for me, it doesn't matter,
Another said it's a good idea, but has concerns.
Especially because the vaccine isn't available to everyone at this point right now. I don't want it to become, only the people who are lucky and privileged to get the vaccine can go into my establishment. I think that's discriminatory. I don't think that's okay.
The program is done in partnership with IBM.
The app is still being tested right now, but the governor says after getting proper approvals, the public will be able to download it on your Google and Apple phones. Phil Zhou, NTD News, New York.
Remember the big freeze in Texas? Well, the person in charge of overseeing its power grid has been fired. Bill Magnus will have 60 days termination notice, but will continue to serve during the time. And the board will start searching for a new CEO right away. 7 of ERCOT's 15 board members have resigned since the blackouts. The next board meeting is set for April 13th. For small business owners across the country, the past year has been all about survival strategy. We hear from 2 business owners in California who explain what it's been like and what they're doing to stay afloat.
At April Cakes in Montebello, owner Pauline Palomino said she's gone from making luxurious wedding cakes to much smaller treats. The bakery was founded by Palomino's mother, April, more than 30 years ago. Palomino says her 6 employees are like family, which made it even harder to call them about the shutdown.
And then 2 weeks turned into 4 weeks, into a month, that's when I realized we're not coming back anytime soon. And I called them and I said, you guys file for unemployment. And I felt like this is so hard for me to say, but like a failure because they depend on me.
Amid their struggles, April Cakes and thousands of other small businesses across the country say the Paycheck Protection Program, or PPP, helped take some of that burden. That's the pandemic aid program, aimed at helping keep small business staff employed. In Pasadena, the soap kitchen has sat empty for almost a year. The store occupies a small space along Fair Oaks Boulevard in Pasadena, one of the busiest corridors in the Old Town area. But the business depended on foot traffic.
You know, that's what we're paying for, for the rent, and to have to close that down and rely completely online for us was not easy.
Because Yu runs the soap kitchen on her own, she only qualified for a small portion of the full PPP loan. With a $5,000 monthly overhead, she considered closing the business she founded 18 years ago. But she remains hopeful the online sales will allow her to keep making the specialty bars of soap for now. Andrew Thomas, NTD News.
The third time appeared to be the charm for Elon Musk's Starship rocket, until it wasn't. In a test flight, the SpaceX prototype appeared to soar flawlessly into the sky, fly itself back down to Earth, and successfully land in Boca Chica, Texas. But just minutes after touchdown, it exploded into flames. Mixed feelings for Musk. This latest model did come much closer to achieving a safe vertical touchdown than the 2 previous models. Now Musk wants to make human space travel more affordable and routine, eventually allowing people to live on Mars. I don't know, really looks like CGI to me, but whatever. SpaceX is planning to launch the first civilian crew into orbit around Earth later this year. Good luck. You can now invest in Dave Portnoy's latest project, an ETF that tracks social media hype. He's good at it. Just launched today, the fund analyzes social media posts to predict bullish moves in stocks.
Investment firm VanEck has launched a new kind of exchange-traded fund, or ETF, called Buzz. It uses natural language algorithms to measure stocks that are being talked about positively on social media.
The algorithm was basically designed to scrape the internet, social media, and find positive sentiment on stocks.
What goes in the index has to have a market cap of at least $5 billion, and it has to be talked about on social media. The 75 highest-ranking stocks are packaged into the ETF. Internet celebrity Dave Portnoy endorses the fund, which troubles experts because he owns part of the index that the ETF is based on. One expert says measuring sentiment is nothing new, but he doesn't think social media is a good way to do it.
I think there are some risks associated with this strategy, the first one being manipulation. So bots and things like that are becoming really sophisticated, so people can easily create a way to hype a stock quickly on social media.
Also, most of the people on these social media sites fall into one category.
Those are generally really short-term investors. Those aren't people trying to invest in companies for the long term, most of the time.
However, after the GameStop Wall Street bets phenomenon, social media's influence is clear. Currently, Buzz's largest holdings include DraftKings, Twitter, and Ford.
Honda will start selling a limited edition of its flagship Legend sedans this Friday. It has level 3 autonomous driving technology. That means drivers can safely take their eyes off the road. I dare you. The car can also navigate congested highways. Kira Lee reports.
Self-driving cars equipped to navigate congested highways. Honda says it will sell a limited batch of its flagship Legend sedan equipped with the cutting-edge autonomous technology. That makes it the world's first automaker to sell vehicles equipped with the certified Level 3 autonomy. Once activated, that allows drivers to watch movies or use screens while their car takes charge. And the plan to sell 100 of the vehicles is a significant step towards a bigger goal. Honda wants to be the first company to mass-produce a car with Level 3 ability. The limited edition Legend will be sold in Japan from Friday, March the 5th, costing about $102,000. Honda said the Legend's traffic jam pilot system can control acceleration, braking and steering under certain conditions, adding that it can also alert the driver to respond when handing over the control, such as by vibrating the driver's seatbelt. If the driver continues to be unresponsive, the system will assist with an emergency stop by decelerating and stopping the vehicle, while alerting surrounding cars with hazard lights and the horn. The autonomous race is on among global automakers and tech companies. Both Alphabet's Waymo and Tesla have been investing heavily in self-driving tech. Audi unveiled a Level 3 car of its own in 2017, but regulatory hurdles prevented it being widely adopted.
Still to come. Money doesn't grow on trees, but dollar trees are growing everywhere in the United States. We have the details. And are you looking for a quick way to check your team's health without going to a clinic? Well, one company may have the answer. All you need is a smartphone. That and more after the break.
It's just clear as day. The media, whether it's broadcast, cable, or print media, has become extremely biased. And I started looking online for alternative ways to get information. And I saw an ad for a free trial. And I looked at it and I said, Epoch Times. I mean, come on, this is end of days type of stuff. I mean, what are they going to be talking about here? And I said, well, it's a free trial. Let me dig in. Is it giving me both sides? Is it giving me an objective point of view here? I have looked for opportunities to see where they might be biased, and I don't find it. It has given me a level of trust in media that I didn't think I'd ever get back. I love the Epoch Times because it has renewed my faith in the idea that a reliable, responsible, non-biased source of information is available. And I can say that I love it because of that.
Disney is closing at least 60 of its brick-and-mortar Disney stores by the end of the year. On Wednesday, the Walt Disney Company says it's downsizing its stores in North America by about 35%. A large number of stores around the world are also expected to close. At its peak in 1999, there were nearly 800 Disney stores globally. More people now are shopping online, of course, especially because of the pandemic. So going forward, Disney says it plans to put a larger emphasis on e-commerce. But you'll still see Mickey merchandise at its theme park stores, third-party retailers, and mini stores found inside businesses like Target. What about Dollar Tree? Their stores are spreading like weeds. Company officials say they plan on opening 400 new Dollar Tree stores and 200 Family Dollar stores throughout 2021. The two chains currently own nearly 16,000 locations in the United States. Analysts say the pandemic has hit many retailers hard, causing thousands to shut down for good. But less expensive alternatives, especially dollar stores, are thriving. That's as consumers look for less pricey purchases. Dollar Tree says sales at its established stores rose nearly 5% during the 13-week span that ended this January, compared to the same time frame the year before. All items at Dollar Tree are price marked at $1, while Family Tree items are usually under $10. China will be happy. And a new law in Spain, if passed, would shake up how food delivery riders would operate. The law will see riders classified as employees, not as contractors. NTD's Patrick Hayden has the details.
Gig workers doing food delivery in Spain are expected to be classified as employees rather than contractors. Currently, these workers do not receive full employment benefits such as wage protection, social security, or insurance in Spain, but that's set to change. Some riders are hoping for the change, but others don't want it.
What we love about this job is freedom. Being able to work when we want, being able to go out to work when we need it. If we need more work or our rental expenses grow, we work twice as much. No one is going to tell us that we can't work.
Azad believes the new law will help take pressure off.
Man, I'm in a bad situation. Yes, because I've spent a couple of weeks in which I've been working 8, 9, 10 hours a day, but I earn 10 or 15 euros. This doesn't help me make a living, to eat, to support my family. It would be nice for me to have a contract and a fixed salary.
A death of a Deliveroo rider on the streets of Madrid last month while working has brought spotlight on how these workers are treated. The new law would give riders and their families more protection in the case of a fatal accident. A Supreme Court ruled in September that workers of the Barcelona-based food delivery app Glovo were employees, not freelancers. Labour unions denounced that some delivery companies are looking to hire riders through intermediary companies to get around the expected change. A union representative says it's clear who the boss is.
If the platform by using an app tells you where to work, how many orders you have to take, your salary and where you have to be and at what time, you are an employed worker. The company is the boss.
Hiring riders will mean that the employer will have to pay social security costs, which amount to about a third of a salary. It would also mean that the company would have to provide riders with their means to carry out their work. That would include providing a bicycle or a motorbike. Patrick Hayden, NTD News.
A Singapore startup has developed a health app that could be a game changer. With a 45-second scan, you can get your vital signs checked without going to a clinic or even seeing a nurse. Francesca Liner reports.
Every morning before their shifts at a Kojima construction site, workers check their vital signs. All it takes is a 45-second scan of their faces using an app developed by Singapore startup Novatech. The app takes note of heart rate, oxygen levels, respiration rate, and even stress levels using artificial intelligence-based technology. So, how does it work? The Novatech app uses remote photoplethysmography and AI to capture and analyze the user's vitals.
What we do is we use the white light that's now reflecting off my face. We apply smart computer vision techniques to first identify the face, then filter this white light into the channels that we're interested in, and then deriving the vital signs from those channels.
Kojima has been using Novatech's app at its work sites in Singapore since December 2020 to complement daily temperature screenings.
It is very convenient provided that the worker adhere to this scanning on a daily basis. So we do have our own temperature monitoring system installed as a second line of defense.
Similar apps that utilize smartphone cameras to scan users' vital signs do exist, but Novatech claims that its technology goes one step further by using the data to offer a diagnosis of the user's health condition. The app is still under review, but Lau said there is a significant interest in the technology.
The ability to use RPPG and to have constant remote patient monitoring without the need for additional manpower or equipment is really a big problem solver for a lot of healthcare providers globally.
That's the latest business updates for today, but you can catch NTD Evening News at 6:30 p.m. Eastern. That's with Stephanie Cox. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
Don't let YouTube decide what information you get. That's your choice. YouTube is deleting our videos and cuts you off from a source of honest reporting. Make sure you don't lose access to NTD's news content, and take a quick moment to subscribe to our newsletter so no matter what happens here, you'll keep your access to a trustworthy news source.